Hello, PEI. Welcome back to the Deep Dive. And a big thanks, as always, to Mike Montague Remax Charlottetown for the amazing research and production on this episode. You know, it's tax season here in Canada, and I feel like every time I turn on the news or scroll through social media, everybody's talking about housing affordability.
Yeah, it's definitely top of mind for a lot of folks these days. And for good reason, it feels like things are getting tougher and tougher out there.
For sure. But the good news is that there are some tax incentives out there that can actually make a difference. So we thought we'd take a deep dive into some of the most impactful ones.
Exactly. A lot of people either don't even know about these incentives or they assume they don't qualify. So this deep dive is all about breaking down those barriers and helping you figure out which ones might be relevant to your situation.
Okay, so let's jump right in. We know a lot of our listeners are first-time home buyers, so let's start with some incentives that are specifically for you. First up, we've got the Home Buyers Plan, or HBP for short. This one lets you withdraw from your RRSP savings to buy or build your first home. And the best part is you don't get taxed on those withdrawals.
Right, and they actually increased that withdrawal limit recently, bumping it up to $60,000. So if you're buying with a partner, that means you could potentially access up to $120,000.
Wow, that's a game changer. But, life happens, right? What happens if someone can't repay that money within the 15-year time frame? Like, what if they hit a rough patch financially?
That's a great question. And there are provisions in place for those kinds of situations. If you experience financial hardship, you can actually apply to the CRA to temporarily suspend your repayments. And in the event that you can't fully repay the amount within the 15 years, the remaining balance gets added to your income for that year and taxed accordingly.
Okay, so it's not ideal, but at least there's a bit of a safety net there.
Exactly.
All right, so we've talked about the HBP. Now let's move on to another really great option for first-time home buyers. The First Home Savings Account, or FHSA. This one lets you contribute up to $8,000 each year, up to a lifetime limit of $40,000. And get this, those contributions are tax deductible.
Yeah. And any investment growth within the account is tax-free. So you get a tax break going in, your money grows tax-free, and then you withdraw it tax-free to buy your home.
That sounds pretty amazing. So much better than just putting your money in a regular taxable account.
For sure. It's designed specifically to boost those savings for a first home. And you have a 15-year window to use those funds. So, it gives you some breathing room. You're not locked into buying a house right away.
Oh, that's good to know. But what happens if someone decides homeownership just isn't for them after all? Can they just take the money out of their FHSA and go on a shopping spree?
Well, not exactly a shopping spree, but you do have options. You can actually transfer those funds to an RRSP or an RRAF without any tax implications.
Oh, that's pretty handy. Okay, so we've covered the HBP and the FHSA, both amazing tools for first-time home buyers. But there's one more we should mention, the Home Buyers Amount, or HBA.
Yeah, this one's a non-refundable tax credit of up to $1,500 for eligible first-time home buyers.
So it's not like you get a big check in the mail, but it can help reduce the amount of tax you owe, which, let's be honest, is always welcome relief, especially when you're dealing with all those closing costs and everything.
Absolutely. Every little bit helps, right?
For sure.
Yeah.
All right, so far we've been focusing on those first-time home buyers, but now I want to switch gears a little bit and talk about some tax credits that might be helpful down the road, even if they're not directly related to buying your first home. I'm thinking of the Home Accessibility Tax Credit and the Multi-Generational Home Renovation Tax Credit.
You got it. These are definitely worth knowing about. The Home Accessibility Tax Credit, or the HATC, that one can really help if you need to make renovations to your home to make it more accessible, maybe for aging in place or a disability. You can actually claim up to $20,000 for things like ramps, grab bars, walk-in bathtubs, that kind of thing.
That's a pretty generous credit. And that applies to both the materials and the labor, right? So, like whether I do it myself or hire a contractor, I can still get the credit.
That's right.
Okay, good to know. Now, what about that multi-generational home renovation tax credit? What is that all about?
Well, this one is a really great option if you're thinking about creating a secondary suite for maybe an aging parent or a relative with a disability. You can claim up to $50,000 in eligible expenses. And here's the best part, it's actually a refundable tax credit.
Wait, refundable. So even if I don't owe any taxes, I can still get money back from the government.
Exactly.
That's amazing.
Yeah, it's designed to encourage those multi-generational living situations, make it easier to create those inclusive housing options.
I love it. What else is out there that we should know about?
Well, let's talk about new construction for a minute. There's an incentive called the GSTHST New Housing Rebate. So if you're buying a newly built home or even one that's been substantially renovated and, it's going to be your primary residence, this rebate can help you recover some of that GST or HST that you paid on the purchase price.
Oh, okay. So that sounds pretty straightforward. Are there any, catches or anything?
Yeah, so there is a cap on the home's value to be eligible. It has to be under $450,000, and that includes the value of the land as well.
Got it. So it's really targeted towards, those more affordable homes.
Exactly, which makes sense given, the whole focus on housing affordability these days.
For sure.
Okay, so now this next incentive. This is a really interesting one. And this has the potential to make a big impact, especially here on PEI. It's called the Purpose-Built Rental Housing Rebate, or PBRH.
Okay. Yeah, I've heard a little bit about this one. What's the deal with that?
So this rebate actually offers a 100% refund of the GST/HST on new purpose-built rental housing.
Wait, a full refund? Wow, that's huge. It must be a pretty big incentive for developers.
It is. It is. It's designed to encourage developers to build more rental units, which could really help ease the pressure on that, really tight rental market that we're seeing right now.
Oh, for sure. Yeah, we need more rentals.
Exactly. So, of course, there are some criteria to qualify. The project has to have at least 4 self-contained units, or at least 10 private rooms or suites. And 90% of those units have to be for long-term residential rental.
Okay, so no Airbnb empires with this one.
Right. It's got to be, those stable long-term rental options.
Okay.
And there's also a bit of a timeline, too. Construction has to have started, well, I guess it was last fall, between last fall and 2031, and it has to be substantially completed before 2036. So, they want to make sure these projects are moving forward and actually, contributing to that rental supply.
That makes sense. Get things moving.
Exactly.
But here's what really blows my mind. Here on PEI, the province is actually, sweetening the deal even further. They're waiving the provincial portion of the HST on those qualifying projects.
It's pretty amazing, right? So that makes it even more attractive for those developers to come in and build these purpose-built rentals.
Wow. That's a big move. I wonder, what kind of impact that will have on the rental market here on PEI in the next few years.
Yeah, it's tough to say for sure, but it's definitely a good sign, right? It shows they're, committed to addressing this housing issue.
Yeah.
And hopefully it will translate into, more options for islanders, more affordable options.
These programs can be a little confusing, and the tax system, well, let's just say it's not always the easiest thing to navigate.
You got that right. It can definitely be a bit of a maze. That's why it's so important to do your research, ask questions. Don't be afraid to reach out to a professional. A financial advisor or a tax specialist can really help you make sense of it all.
So to our listeners, here on PEI and everywhere else, take what you've learned today and run with it. Explore those resources, ask those questions, and speak up for policies that promote affordable housing for everybody.
Knowledge is power. That's what I always say. And when we're talking about something as important as housing, we all need to feel empowered to make those good decisions, decisions that build a better future for ourselves and for our communities.
Couldn't have said it better myself. And a huge thank you to Mike Montague Remax, Charlottetown Realty, your island realtor, for all the hard work that went into producing and researching the content for this deep dive. We hope you found it helpful and informative. We'll see you next time.